Good morning, everybody. It's Thursday, April 11th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here have May corn up 3/4 at 435. May soybeans were down 3 1/4 at 1161 1/2, and May Chicago wheat was down 1 3/4, 556 3/4. A number of different reports out here this morning. Export sales were pretty poor for corn, 325,500. Low end of the estimates were looking for around 750,000. So pretty disappointing on the corn side. Soybeans were 305,300, kind of lower end of the estimates. They were looking for 200 at the bottom end. So in line, but like I said, not overly exciting. Wheat sales for 23 were about 80,700. New crop sales for 24 were pretty solid at 274,400. And meal sales for 23 were good, 187.9, 187,900 there. CONAB was released this morning ahead of USDA report later this morning. We had 146.9 on the soybean side. 146.52 on the soybean side. That was versus their March estimate of 146.9. Corn, their corn estimate came back at 110.96 million tons. That was versus 112.75 on their March report. So, and then PPI up 0.2% this morning, another key inflation indicator. It was better than expected. They were looking for about 0.3%, so it was slightly better than expected, but still on a 12-month basis, it rose 2.1%, which would be the largest gain since April of 23. So with that all being said, guys, we'll try to piece this thing together. I think on the outside, we talked a little bit about it yesterday, but there's still, a pretty good out trade or spread between where the USDA is at and what CONAB continues to print. And we'll see those numbers here at 11 o'clock Central. So Dustin, maybe kick us off with a few initial thoughts, and then we'll swing it around the room.
Yeah, Dan. Let's talk first about the CONAB numbers. Corn printed in that 112, 113 range from CONAB out of Brazil. USDA is at 124. So that's what, 450 million bushel difference. Big difference there. And then on the bean side, I think USDA is still at 155 versus CONAB in that 146 range. Mm-hmm. So, who are you going to trust, the USDA in North America or CONAB locally? I think that there's a good reason to think the USDA is going to have to start coming down to those numbers. Now, has the market already priced that in is the big question. I think that to some degree, there's obviously a lot of participants that would be leaning that way anyway, and they know historically the USDA is slow to come down to those numbers. So it's not to say the USDA lowers that and the market has a move, because everyone takes that as fact. But I do think that there is some reminder of everyone that's just simply using USDA forward balance sheets of a tightening that comes as they do start to lower it. So I'd be curious to see what they do today.
Yeah, and I think too on that, just to add to that, the private estimates were sharply lower than they are today, right? So USDA kind of stays high. Private estimates overshot it on the downside. They've been inching up. So that spread has narrowed mostly by private estimates coming up. To see the USDA start to come down a little bit would make sense. Feels like the private estimates are kind of getting into the zone of where it is. Obviously, the biggest one, I think we're 10% off, almost 12% off between USDA and CONAB on corn. So much bigger discrepancy on corn even. So that'll be interesting. And then Argentina, they cut their output 6 million tons because of basically pests and disease, which would be one of the bigger cuts we've seen from non-drought type influences. So, again, there's, we're talking about, in my opinion, corn, 15, 20 million tons discrepancy in the South American numbers, which is a lot of bushels. You're talking 800 million bushels, somewhere in there. So pretty big difference on what those, what end of the range those numbers fall on corn as far as, trade and all those sorts of things. So I think it's very important.
Ben, thoughts out in the East?
Yeah, I'm thinking, and I think that the disparity and the potential for corn there, we've been really kind of overloaded with old crop corn in the U.S. And even with if we do get those kinds of reductions, it may not be something that we fully materialize until we get a little deeper in the growing season. I think there's been a kind of a bias towards the seasonal rally here. So I think that has to dictate your strategy a little bit. In the event some of these things filter out, the grower continues to get less skewed against the managed money short, and then potentially us picking up a bigger slug of export business to fill the gap if these lower corn estimates materialize. So it's just something to keep in mind that that may be something that's a little bit backloaded from a positivity standpoint. I mean, it'd be great if it materialized sooner rather than later, but with Safrinha being in good shape, etc., just kind of the first thought that comes to mind. I was shocked to see corn exports drop off as much today as they did. That's been one of the things that we've been pretty positive on, because they've been very consistent, very exceeding expectations or near almost every week for probably going on, 8 or 9 weeks, 10 weeks. So I think all those things, that picture unfolds, and we tend to have a kind of a lean in our business to try to explain things away. And time is the one thing that often gets away from us, that it doesn't always line up with our logic and our time frame. So I think those things become really important in figuring out your marketing plan.
Yeah. So just to add to that, Ben, export sales were weak, but exports were strong.
Shipments
right. So shipments were good. So shipments have been strong. Weekly shipments that we see, they were still, 1.5 million tons. So actual, loadings and countries taking corn has been strong. Purchasing out forward has been weak. Whether that's just trying to see how Brazil ends up, or trying to be more patient on prices, just not bullish. I think that might make some sense there as far as like forward sales.
Yeah.
But yeah, I think some of these things too, like you've seen spreads kind of, narrow up a little bit here on this. It seems like basis levels have picked up a little bit. So I'll be curious. And one more thing on the South American numbers too, just to be clear, if the USDA is closer to being right, it's really burdensome, right? So you would need to be towards the lower end of estimates to be excited at all. So I think that's the extreme there is, that 20 million tons is the difference between, probably a pretty big bear market from here or stabilizing to higher.
Yeah, I was, I look to it, all these things that are happening geopolitical, and it just doesn't appear to be getting any better in the Middle East. You wonder how
worse.
There's, I think that the anti-Israeli coalition would love to bait them into an attack on Iran directly, and we're seeing that play out in the media. So, just looking at some of the things that may affect some logistics in the future.
Yeah.
Yeah, this retaliation piece from Iran to Israel is a big deal when we stand with Israel in that capacity, and that's that could be pretty interesting. Crude definitely yesterday was responding to that news. I mean, what we got over $90 a barrel there. Dustin, is that
Brent? Yeah, Brent crude did.
Yeah.
Right now, May crude WTI is 85.60 at the moment.
Yeah, down a little bit today.
Yeah, down a little bit today. It's interesting. So PPI came out this morning, and so this is the BLS numbers posted, and they're actually saying, obviously the as you mentioned earlier, Dan, we had a hot CPI yesterday. We had kind of what was viewed as a favorable PPI report today, producer price index today, from some month-over-month changes, including energy. Energy prices actually rose over the last month. BLS is reporting that they fell. So it is kind of interesting going into these reports, and you're starting to see maybe some data that doesn't necessarily agree with indexed things that we actually can track on the exchange. And it's election year as well. We also had yesterday, Biden talking about predicting a rate cut this year. There's still that question of the politicization of the Fed and whether or not they go down that route of, kind of adhering to this pressure that you get, political pressure from a presidential appointed chair on whether or not to cut in an election year, and if that matters. So if you start seeing cuts, that's obviously going to be a really positive thing for commodities, just because it could spur inflation and lower rates. It's just favorable for dollar-denominated assets in general. So I'd be curious to see more and more Fed talk around the idea of cuts. If we still get those two to three cuts this year, and the dollar starts reacting, that's one more thing that can send crude oil up toward the higher 90s or even 100, just because we might be doing it too early.
Well, you have guys like Jamie Dimon, some other really smart guys that think it needs to go closer to 8%.
Yes.
So the data is really not backing these cuts, and every new piece of data, it feels like we went from 6 cuts to 5 cuts to 4 cuts. Now the market's factoring in maybe 2 cuts.
Yeah.
And the smarter people seem to be like, there's no cuts,
And there lies the rub, because a lot of smarter people are saying this, but a lot of political figures, including the president, are saying, I'm predicting a cut this year. A cut helps the election, right?
Absolutely.
We have a bit of a conflict of interest here. The Fed is supposed to be independent, not affected by this. There's never been a Fed chair that's actually been fired by a president, but the president does appoint them. It just hasn't been tested in the court of law yet. And we're starting to see things like the BLS data not support what we're actually seeing on an index tracking over the last month. There are some questions out there about if they have been politicized and there's cuts when there shouldn't be, we could start to see a little bit of a runaway market in these dollar-backed assets. And I think that's why you're starting to see gold. We've been talking about this a lot. Gold, crude oil, everything rising is because we know that we don't want to take any pain in this country. We don't want to go to 8% rates, because that's a painful outcome economically. They're going to cut and destroy the currency is where my bias would be, is that's an easier path. And therefore, let's not get overly excited about dollar-denominated assets falling if that's the route that they very well go.
Yeah, what was the story yesterday? I think it was that Costco's selling almost $200 million worth of gold every month at Costco.
At Costco. Wow.
Yeah, so it's pretty interesting.
Get a chicken, buy some gold.
Yeah, 6 things of ketchup and a gold bar. I mean, that sounds about right.
Yeah.
Well said, Dan.
No, that's good stuff, guys. It's going to be an interesting show the next 8 months. That's for sure.
Yeah, there was a lot of things that are kind of, pushing and pulling these markets. Like the dollar making new highs for the move. That's a headwind for commodities in general. But some of these other things are huge tailwinds. So and we're trading around all these moving averages. So just a lot of stuff going on in this area that something could really blow these markets out of this range that we're in, up or down.
Yeah,
So,
risk levels super high.
Hard to make a big line in the sand right here and say this is what the market's going to do, because probably going to be wrong either way.
We got a couple minutes here coming into the open. Ryland, give us a little update on cattle for us, please.
Yeah, cattle down hard yesterday, and hogs were down as well. You got a sweeping key reversal in hogs, so new contract high, and you close well under the past 3 sessions lows. So you took a lot out of the market really fast. There was, on the bright side, some huge sales here to to Mexico, South Korea, China. Weekly exports 47,400 metric tons. So that's good news on the demand side, but I think you traded a lot of that, so wouldn't be surprised to see a little bit more follow through. Just from a technical level, you had bellies down $8. You had a $3 price decline in cash, so kind of a weaker tone going into the day. And then on the other hand, you had another case of bird flu in North Carolina in a dairy herd. So I think that was kind of the catalyst yesterday. It seems like, just judging by open interest, that we're starting to see the longs get a little bit more active about getting out of this market, possibly rolling into some of these other commodities that we talked about. But it seems right now, the market's been pretty defensive. It's staying underneath all the major moving averages. So we're just kind of waiting to see what cash does here. Cash is hopefully going to be the saving grace for the big discount on the board once the funds have reduced their positions to where they want to be right now. So there could be some opportunity here, I think, from the buy side of the market. On the other hand, it's at a very elevated price. I think if you're playing that game, kind of looking for a quick near-term bounce. But otherwise, just waiting for cash. Beef export sales were nothing special. They were down 27% from last week at 13.6. So just maybe I think there's going to be a lot of eyes on corn and beans, especially corn, just on the feeder sector. So we'll see if the report has any impact on that today.
Very good. Thanks, Bud. Just came into the open here. May corn up 1.25 pennies, 435.5. May soybeans are down 3.5, 11.60, 1.25 is the last. And May Chicago wheat down 2 3/4, 5.55 3/4. USDA will be out with that WASDE report at 11 o'clock Central. We'll have our response in this evening's commentary, and then I'm certainly talk about it tomorrow in the war room. So, and then also one administrative item, we got Brian back, so we'll have Fun Fact Friday tomorrow, which will be good to put a bow on the week. Every day that the markets are open, we're streaming live on X, Facebook Live, and YouTube Live, 8:15 Central Time. Thanks, guys, for the comments this morning. It was a good discussion. I hope everybody has a great day, and we look forward to talking to you tomorrow.
Thanks, Dan.